All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for September 16th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 447. My name is David Kosmiger. I'm the creator of TimingResearch.com, and you should see my screen right now. And today I've arranged for Hans Albrecht of CrushThePremium.com and CashFlowInsiders.com to join us, as well as Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com. And the option professor is back to moderate. If you missed this last week, we did a huge Fibonacci and Elliott wave event. We had 27 different educators all providing a ton of great information on trading using Fibonacci and Elliott wave techniques. So all of that is on TimingResearch.com as well. If you missed it, you can review those recordings at any time. So now I'm going to go ahead and turn it over to the option professor.
Okay, thanks, David, and welcome everybody. We've got a big week ahead of us. Retail sales, I guess, tomorrow, then the big Fed meeting, and then some housing information, and then onward till the end of the quarter. So we got a lot going on here, and the markets today are pretty steady, but that can change pretty quick. All right, you guys, we're going to start out with the S&P 500, as you can see right there, and basically, I just wanted to get an idea from you, how you feel about the index right now, as far as short term and then a little longer term, and what kind of indications are telling you, which way you think it might go. So let's start out with Hans. And Hans, again, how are you feeling about this S&P?
Thanks, option professor. Good to be here again, everyone. I find it's a very curious situation because I feel like there's, I'm listening to a lot of different people, and I'm in a number of different trading rooms, and there's a significant amount of nervousness and fear going into this event. And the market is trading at all-time highs. So the market isn't really very nervous about things. Now, having said that, there are some warning signs below the surface. And so, of course, we've talked about this before. We had that early August sort of vol blow up. And then again, in early September, we had sort of a strange kind of event from the volatility of volatility, the VVIX. And those are indications that something is sort of brewing below the surface, that there's a little bit of an inability for people to kind of get out of a small exit door when they need to get out. And so it's kind of strange. So from a sort of, 50,000 foot view, I'm feeling fairly good about the market. I feel like from a fundamental basis, profit margins are all-time highs. As far as I can see, the jobs data is actually pretty good. Firings are down, pointing down. Retail sales, fantastic. There's a lot of really, really good data out there. Nothing at all that's really screaming recession to me. Yet at the same time, now we've got a 60% chance, according to futures, that we're going to get a 50 basis point drop. And I mean, I think 25 is beyond sufficient, but I feel like there might be something else going on there, and I'm worried that it's something a little bit more on the structural side of things, and the derivative side of things, et cetera. Some of the things that I just alluded to. Whereas from a fundamental basis, I think things are pretty good. I mean, rates are going down. We're seeing the broadening out that I've been talking about for a couple of months. This incredible sort of potential for a roaring 20s, right? Tech doesn't disappear, but the rest of the market kind of gets a little bit of a chance to catch up now with lower rates, and a lot of people, employment's going to really benefit from that. So I feel good about the market, but I feel like we need to get through this week. And if we can, relatively unscathed, I feel pretty good about the market.
Sure. Well, I think, again, it does seem like they've discounted an awful lot. So it does reek a little bit of whatever they did on the rumor, look for the fact to turn it maybe the other way a little bit. Michael, I got something to talk to you about. Are you ready?
Sure.
All right. Can we put up the QQQ for a second? Because I think this is going to be a great thing for us to talk about. All right.
Okay.
because I'm what they call, you know, you have jailhouse lawyers. I'm kind of like a jailhouse technical analyst sometimes. You know what I mean? I'm not that familiar with Fibonacci and Elliott wave. I've been around here so long, you'd have to know something about it just by being in the rooms. You know what I mean?
Right.
But here's what I saw. I see a low on, I guess it was the August 5th, right? And that came in at around 423. Then I saw a rally to 485. Now that was 62 points on the QQQ. If you take 61% of that, you get about 38. If you take 38 off the 485 top, you get 448 ballpark. And that's exactly where it hit. And now it's on its way back up. Now, my question is if you get a Fibonacci correction, which you'd have to say that's 100% spot on, does it generally blow out the high? And would you call this A, B, and then C is the most powerful? So we should maybe be anticipating blowing out that 485, probably even maybe blowing out the highs even? Or do you think that, well, what's the flaw in my thinking?
I don't know. I'm not going to say that there's a flaw in your thinking. I'm going to say you left out one pattern that is very, very possible that that's what's happening. And that from the, I'm going to go one step back. From the July 11th high, which is, again, the all-time high for the Qs at 505, and then down to that low that you correctly pointed out on August the 5th at 432. And then what that could have been all of the corrections. In other words, I can count ABC down to there, and that would have been the entire correction. And then you get another, but what happens is you get another ABC up. So, and that's that rally you're talking about, and it was powerful and it was strong. And I think I even discussed it on one of the programs here, that there was a very strong possibility that the fourth wave correction, which I've been looking for, was complete at that August 5th low. Now, what goes against that is when you add Fibonacci, you can use Fibonacci time fractals in this as well. And then with the time fractals, it was way off base. But I will tell you where I am looking for that low based on the time fractals between today and Wednesday. Now, so what am I counting this as? I would think that you've got the A, you've got the B, you've got the C. We just finished a D wave likely on Friday, and now we're in an E wave down. And that might come with by Wednesday, a quick flush, like both of you just mentioned, that we've got, you know, buy the rumor, sell the news type of a thing. And I feel now, Hans, you started to bring this into some focus. I don't think the fundamentals make nothing. Nobody's paying attention. Well, people are paying attention to them, but the professional traders, the ones that are out there moving the market, it's all about the options flow. It's all about the capital flow back and forth. And then lastly, it's all about the gamma levels. And that is what's producing, and that's exactly what produced the sell-off we had into August the 5th. Then we had it to flip. So let me just kind of encapsulate it by saying the following, that what happens when we get these types of move, the market moves into risk off or risk on. That's the trade. Risk off trade means they're getting out. Risk on is they're putting it back on. So coming all the way up to that high that we had in July, that was all risk on. Mm-hmm. And that risk on came from the April low in the Q. So from that point, it was just all risk on all the way up. And if you notice, it just rallied. Didn't care what the news was. It just rallied. Then we started to come off of that high. And we reached a point after we reached the interim high on July 31st. So coming into August, and actually the date is August the 2nd, where we started to tip the scale, and we dropped and we broke a volatility trigger, which then just cascaded upon itself. And then we got that massive sell-off, which really took us 5 days to get down to that low. And it was just smash, smash in the NASDAQ and of course in the Qs. So that is then a risk off. The triggering a volatility trigger, you fall into risk off. So what they're now doing is instead of having to sell volatility to go buy the underlying volatility, they're reversing it, getting out because they're getting killed because they have such massive gamma levels that when they break, it's like opening up a floodgate and they have no choice. They have nothing they can do because what happens if they do nothing is they're just getting longer as the market is tanking. So now reverse that. And it took really, think about maybe about 2 or 3 days before they flipped it back from negative to positive and then risk on. So the risk on all the way up. And I think the risk off really started to break about September the 3rd. And we've had it twice. And they actually flipped it back to risk on November 10th or 11th.
I want to ask you a quick question here. Okay. So I think one of the things is, and this is very true about Elliott wave and Fibonacci, is the reason it's subjective, which means it can be either very good or absolutely worthless. It's where you start your counting from. Now, I was counting from the low, and I'm looking at a 1, 2, and then a 3 goes north. But if you started your count at the top and you called down 1, rise 2, down 3, rise 4, then what you're saying, and I'm looking at the VIX rising, this could be a 5th wave to the downside. And since the yield on the 10-year treasury has gotten down below the August 5th panic, and they always say the bond market is smarter money than the stock market, it could be very possible. And as I look at the VIX now at 17, as it, it can't get under 15 very well now.
Right.
If it gets above 18 or 20, what's going to happen is you're going to get a 5 down. And so that's just a classic example of, I was looking through the lens of counting from the low, but the more accurate one, and we'll know soon enough, would probably be counting from the high and using this as like a 5 waves down.
Yes, and
that could be the tip of the day.
The
fifth waves is going to blow out the gold line.
Agree, but to fill in the blank about how it can be a 5th wave down, it's not necessarily going to be a 5th wave down. It's a C wave, which consists of 5 waves. So again, you're not off. In fact, you said we got an ABC down, and that's off of that big high,
right?
Off of the July high, and that's true. But that's A. And then we had an ABC up. That's B. So if anything, what we've just done is wave 1 of C, and that brings us down to that September 6th low. And now we've done wave 2 of C up to Friday's high. So you're right. We could be pulling the plug, pulling the rug out, and we just start to drop. Now, how do we want to put that into what Jerome Powell and company are going to say on Wednesday?
Well, if they believe that we're going into a wave 5 to the downside, they're going to go 50.
Yeah, I'm glad you said it and not me, because people have been jumping all over me about saying, hey, if they come out with a 50 basis point cut,
you can almost count the gold lines getting taken out.
I agree, but there's so many.
That's some money to be made there. That's why I'm happy to talk.
Oh, there's definitely money to be made, but then we have to go by the adage of what the narrative really has been for so long, is that lower interest rates are just really great, for the stock market, and it's like
that's
not
crazy.
Necessarily.
Now I got another question for you. Is it possible that if this was the high of the NASDAQ move, and this could be the 5 waves to the downside, if the major trend has changed, and if that has happened, we'll get a big wave down, and then we'll get 3 waves up, correct? Because it now
no, I think
impossible.
I agree with you for the first part. I think 5 waves down in this context would still be within a minor wave 4 correction.
Okay.
And
you
so
wouldn't
what we really
throw the towel in on it, even if it looked like 5 waves to the downside. which would be the indication possibly that the major trend has turned over while everyone didn't even know it.
Well, that could be, but guess what happens? They're all going to go like, okay, the trend is now down, and they're going to get more confused as the market turns and flies higher.
Yeah, it'll fly higher, but I don't think if it's truly rolled over, that 1, 2, 3 thing that goes back against the trend shouldn't take out any of this high stuff, should it?
Yes, it should be absolutely. No, if it's done with this ABC down and it's done with a minor 4, then I got a minor 5, and it goes to new all-time highs.
I'm saying, but if it doesn't happen, and if this is truly a rollover 5 waves to the downside, the 3 waves against the trend generally don't take out the high stuff, does it?
Against the trend, correct.
That's
yes.
All right, Hans, we've been hogging the microphone. I want you to throw yourself in here and maybe give some of the things you think on maybe a longer term basis that you might be seeing.
Well, I'm listening with great interest, and I think Michael mentioned these sort of gamma levels, and I would share it if I could. Maybe I will in a little bit, but I have a gamma, basically a gamma profile for the market, and it kind of shows you a little bit of where we stand in terms of positive gamma right now, which means when we have a lot of positive gamma, it just means that, you know, things are more stable because dealers are able to buy on the way down, sell on the way up. But we flip to negative gamma as we go below 5,500. Now, this is an evolving picture, right? This isn't static, and things change throughout every day, especially with 0 DTE, things can change rather quickly. But basically what we've seen over the last few weeks is this sort of gamma narrative that flips quite sharply down around 5,500. And so after last Wednesday when we headed down, I thought that CPI was sort of nothing to write home about, really. But we had this sort of negative move following that started to trigger some of those selling sort of the selling framework that I think has to do with options and has to do with gamma. And so we sort of headed down towards 5,400. And thankfully, we rallied off of that, because I think things could have gotten very, very ugly below that level.
Right.
Where things start to kind of unravel and things feed on themselves. So I think what we're sort of, you know, for the listeners who, this is a little bit opaque kind of stuff, but it's basically, you can almost think of it as the tail is wagging the dog a little more than ever because of the growth in many of these products. And in options in general, which, you know, in itself isn't a big deal, right? If there's $100 billion worth of cover call funds, that just creates positive gamma. That's not a bad thing. But there are all kinds of strategies, the vol targeting strategies, risk parity, CTA is very big now. So you have things that are happening below the surface that you didn't have to this extent before. And I think that's what represents the risk. It's not the risk of, you know, fundamental issues. I think those are generally okay for now. It's this stuff that's going on below the surface. And I think that's what happened on Wednesday. That's what happened on September 3rd. That's what happened on August 5th. Yeah. And that's what's making people nervous. So, Professor, to your point about the VIX, I mean, the VIX shouldn't be 17 with the market at all-time highs. That's too high. But it really is an indication of the nervousness that is out there based on this particular number, and maybe lots of numbers, because now that Powell said, look, I'm not worried about inflation. I'm worried about the economy, and I'm worried about labor. So now we're going to fixate on every single point. Now, if you notice what's happened the last couple of weeks, everyone's like, okay, well, now we just need to get to CPI. Oh, well, now we need to just get to FOMC. Oh, then we need to just get to claims. Then we're just going to be leapfrogging to one data point to another. And I'm not sure when it's enough for the market to kind of go, okay.
Yeah. It seems to me like we're entering between the Fed and the end of the month coming up, and then the new quarter coming up and earnings on October 11th. I mean, I think something somewhat of size is going to be happening. And then, of course, the election's on the first week. So what do we got? You know, after this week, we've got about 5 weeks to go. And in that 5 weeks, we'll have heard from the Fed. We'll have a new jobs number. We will have, what do you call it? The earnings season starting with the banks on October 11th. I mean, you know, the likelihood it's going to, because I'm a big strangler, you know, buying calls and puts at the same time. And if I'm looking at this, that's why I'm so excited to talk about it. this might be a heck of a strangle going into the end of the month,
Amen.
because somebody's going to get nailed.
Yes.
I mean, in other words, when you sell them, it's good, but I mean, every once in a while you get nailed on the sell side. How do you get nailed on the sell side? Because, you sell them when it's dead in the water and all of a sudden it spikes up or down sharply.
Yeah.
And that looks to me, because it's right in the middle of the road, right? Right in the middle of the road.
Yeah. It's
And
a it's a melt up, melt down scenario.
It's a melt up, melt down
like.
scenario. And like I say, Michael is building some kind of a case where we could hit all-time highs, and I'm trying to build a little bit of a case where that RSI underneath, the concept of 1, 2, 3, 4, 5 down is possible. So, or I did the 1, 2, 3 up is possible. So, yeah, between now and the end of the month, I would imagine we'll rectify that question, right?
Yes.
So, well, let's swing over. I think we got the stocks down. Let's go over to the price of gold. And gold is just, will not take out the former lows. And until it does, being anything but bullish is silly, because it couldn't take out 2,300. Then it couldn't take out 2,375. Now it can't take out 2,475.
Yeah.
So, it's a look at the blue line. It's like it's following it like it's the River Jordan. So anyway, let's start out with Hans. Hans, what's your feeling on the gold? You're up in Canada. You got some mining inside information for us?
Yeah, we're miners up here. We love to mine. We love to get our pans out and start fishing around in Lake Ontario, just to see what, you're more likely to find a toilet seat rather than a chunk of gold. But
I thought a mob associate might be found there too.
That's possible. You don't want to know. Yeah, exactly. But yeah, we're no strangers to the mining operations here. So we love our resources, which makes us a little sad lately, because China and global worries about global growth. And that's another thing that's sort of interesting to look at is, despite my sort of feelings that, things are generally okay for companies, we have this sort of sign from Commodities saying that, things are not that great. And oil plunging, and which I'm sad for with my XLE investment. But at the same time, I think gold is it's a different animal, isn't it? I mean, silver is a different animal completely, more industrial based. But gold, I think, just remains a really great holding. I've been long since 200, since 2000, 200 on the GLD. And I continue to think that it looks really good. I mean, neither administration is exactly saying they're going to pull back on spending. And so you kind of win with inflation, and you sort of win with deflation as well. You kind of win both ways with gold. So I think it remains very interesting. I wonder what the Bitcoin outlook is, and I'm sure we'll get to that at some point. But
yeah,
I think gold still looks really good. I think it's a long-term hold, absolutely.
If half the enthusiasm for Bitcoin would translate over to gold, and half of these millennials or whatever would start considering gold as another good alternative, because I don't consider it an extremely over invested area at all. In fact, I think it is very underinvested when you compare it to option trading or bonds or stocks or whatever else. I mean, it's still, I think there's a tremendous amount of potential for growth there, for participation.
Agreed.
But anyway, yeah. Are we looking at the Bitcoin here? We're still on the gold. Okay, we're on the gold. So, Michael, what's your gun on the gold here?
I've been very bullish on gold for a long time. As you know, I actually have, now that we are hovering around 2,600, I think we actually probably go 2,640 to 2,700 before we start to get a little bit larger of a pullback, where we kind of walk in and gold trader goes, okay, enough is enough, and we get a down 100-day, which normally is the signal. It's like we're going to correct here. But I feel that gold reacts to many different things, and I think that we still have enough geopolitical things around our globe. Two of them basically staring us in the face, between the Middle East and just going a little bit north, and so I think we've got that. I think gold also, and has been for a while, tied to the dollar. And so if we see the dollar suddenly just not deciding it's going to go via the dollar index down below 100 and they start perking it up, they will sit down on gold. But now even that's stopping. So I think we've got too many factors in gold that are going to keep it at a higher level. What becomes confusing, I think, for a lot of people is that every time we tick above that high, we're in new uncharted territories, as we are many times in our equity markets, right?
Yeah, exactly.
So, what do we do? Where's our resistance? It's like, so we have to rely on the tools that we have, which are Fibonacci. Fibonacci will give you good indications of where this should go.
Mm-hmm.
I think ultimately, and I know, Jim, we've talked about this. I think gold, before all is said and done, will end up above 3,000.
I mean, there's really no reason why it shouldn't. When you see what they buy a car for, when you see what they pay for a painting, when you see what they buy a house for, when you see how much they'll pay as a multiple on stocks,
Right. Right.
Why
Right.
wouldn't gold be
Good
able to go
point.
to 3,000 in an environment like that? The only thing that
In a
would have
blink,
changed is
I think we can go there quickly.
yeah. I mean, as soon as somebody makes the decision, well, I'll tell you, you want to put the dollar index up? This thing breaks under 100, it could go to 90 pretty fast.
Oh, yes. And guess where
EXY.
gold will be?
Yeah. So, I mean, this thing's hanging on for dear life at 100.
It is. I agree with that.
I keep an eye on
With
things
strong
down here,
emotion, I agree with that.
I keep in between college football games, I watch the markets here.
Is that true?
So anyway, yeah, I mean, you can see that I love key points, and if 100 ain't a key point, nothing is, because you'd banged on the door 3 times now. The RSI certainly doesn't look promising. So to say it's going to blow out the 100 and go down, maybe that's the 50-point cut. You go 50, you go 50 points, people are going to say bye bye to the dollar. You go 50 points, people are going to start thinking inflation could come back, because I mean, people have money, they're working. The wealth has never been bigger because of their houses.
Right.
And do you know what the talk is now? That when the rates drop, you know what they're going to do? That house that went up 500 grand, they're going to start refinancing and tap it into it to do spending. You know that's going to bring inflation down. So the bottom line is that there's a lot of things lining up to make gold go really crazy. The key is you got to follow the tape. And like I say, right now the tape tells me 2475 is your off ramp. And again, it always comes back to the mean. I mean, look, that's why I'm a believer in coming back to the mean. I'm not going to buy gold at 2,400. I'll buy it when it comes back down to 23. I won't buy it at 2,450. I'll buy it when it comes back here. Up there, 2,500. No, I'll buy it back there. I don't really want it up here, to be honest. I'd prefer to get it back towards 2475.
Well, that's also because you're a long-term investor.
Yeah.
Gold.
Yeah. Plus, I also know that things revert to the mean as long as you are not a 3-year-old and have some patience,
Yeah.
Well, yeah. Now you're making a big
laughing.
assumption there, Jim. Big assumption.
I'm laughing at that one.
One interesting thing about gold for option traders is that the spreads can price quite well, because you get this sort of inverse skew versus index, where everyone's paying up for puts, and the upside gets compressed. Upside calls get compressed in the S&P because everyone's selling calls, and then same old. In gold, because it's sort of a different animal and people run to it as a safe haven type thing, you get that upside skew. Call skew a little bit more generous a lot of the time. So that makes, for people who maybe think it's run a little bit too far, you can structure some upside. Just a simple call spread looks not too bad, because you're sort of buying that lower implied vol and selling a little bit higher. So it kind of prices nicely for some upside plays. Covered calls as well, although I don't love them too much, because they never pay that well on gold, given the upside explosive potential. But you can kind of do a little bit of a GLD stock replacement through a call spread and things like that. So that's one nice thing about GLD and gold itself.
Well, Hans, one of the problems you have with the gold premiums is, you can see it has been a steady ride, and steady ride does not create large premiums.
Yeah.
So that's one of the problems with and of course, as soon as you write them, within a month or something, it's right back in your face with the price. So that's what makes it a little bit more difficult.
Sure.
With regards to, I mean, right at this point in time, you can't really build any kind of a case for it to break down. The only case I could make is that there must be a reason why the yields blew out the lows of August 5th. There must be a reason why oil went into the 60s. There must be a reason why the dollar has tanked. There must be a reason why China can't get out of its own way. So if those reasons are a recession is coming and the Somme rule is not different this time, then obviously gold, if money got tight and things got hairy, maybe they wouldn't run into gold because liquidity crisis might cause people to sell things,
Yeah.
Yeah, maybe.
There's actually a really, really great ETV, so it's not electronically traded, and that is the Sprott Physical Gold, and the symbol is PHYS. And I think
that's the go-to place if you want to buy the physical gold.
I think that, yes.
Yeah, no, I'm saying like Michael Burry buys it and stuff like that.
But it's right up in Hans's neighborhood.
That's right. Those guys are right here.
Yeah.
Yep, Sprott. Right.
Now, here's what I was going to say that this might be helpful to people. Let's put up the gold chart going back 10 years, and let's go put up GDX going back 10 years, and that'll explain how gold has done fabulous and has done just as good in stock. I know Buffett says there's no internal rate of return, and it doesn't pay a dividend. So, it's a bad thing to hold on to from that standpoint. But in truth, it's done just as good as the stock market. It's outperformed tech this year. And but the mining shares have lagged dramatically, and look at the gold line there. So there's only two things going to happen in my mind. Either the gold is going to revert back down to the mining shares, or what could be more likely is there is going to be, and look at that, what do you call it? And look at that RSI. That would indicate possibly that we're at an excessive relationship there.
Yeah. Which
would mean that these, and listen, we'll throw up a few mining shares so you can see how there is a big game of catch up to be had, because that's a big exciting possibility. So we've made evidence here that they're lagging, right? So now why don't we look at the charts of themselves and see if that makes any sense? Like, let's look at Newmont Mining, how far away it is from the high, because remember, gold's making new highs.
Yeah.
So let's go over here, some of the big miners. Now look at this. Is there any upside potential here? Well, we're going back 10 years now. You can see it's already started. Yeah, this year, gold mining shares have done great. So let's get that off the table. The question is are they going to play a mean game of catch up here? Because if they are, there's a heck of a lot of money to be made.
Can I toss in one point?
Sure.
I think it's a great conversation, and I think it's very, very worthy of having. But I've always, as someone who has followed gold since the 80s and then had to include miners, Newmont, I'm not sure of their latest, but what it costs per ounce to mine and then refine the gold. So I think that's what really holds back a lot of miners, particularly the newer mines, as if their cost of getting it out of the ground has become so high.
Well, these guys have combined forces with that Australian firm, so they are now the largest gold producer in the world.
Which puts them in a much better frame of mind, to me, that I would say, yeah, they probably, again, depending on what their cost is, that they catch up.
Yeah. There could be a reversion back down. I mean, the RSI is quite high. Let's look at a couple of other ones, like the GOLD, which is Barrick.
Oh, right, Barrett. They changed. See, when in doubt, change your name. Oh, I love it.
I think that's the symbol, GOLD or Barrick. Yeah, it's right there. There you go. Now this one actually looks a little bit. Again, they definitely have gone up already this year. What we're trying to figure out is if you bought them and held them, is there a big home run ahead of you?
I actually would say yes. I don't know how high, is it going to be down center field and out, or is it just going to be along the foul line and out? I don't know.
Well, I'm just wondering, can we look at the longer term graph to see, what kind of real estate would be above if it got cooking? Yeah, there you go. So,
there's plenty.
Yeah, blues crossing gold, that can't be negative. And then of course, like I say, if we had a conversation in 1 year or 2 year, would we be talking at 28 or 36, or would we be talking at 12 or 8?
But I got to tell you, what bothers me is this off of that 2015, 2016 low
Mhm.
up to the 2021 high. That's 3 waves, Jim. But it's kind of like ugly from that point on.
Yeah.
They've not dropped back into uh, a 5 wave up, which would really give you a signal, get behind this. So it's just not developing. So there's got to be something else behind it.
I definitely keep an eye on it though, because again,
I
the
agree.
blue line is definitely turning up a little bit, and again, and the price itself is above both gold and blue. So how moving averages work. The longer you can stay above that, those averages will be turning up because that's how math works.
But
Yeah,
I
the
would
last
think
time
that if it does start to rally with some strength, you got $12. I think it gets up to 32.
There's a Canadian one called Goldfields GFI, which I think has very good strength to it.
Is that Canadian or is that British?
I thought it was a Canadian
It might be, but they must have a
GFI. But I mean, it's just like Steady Eddie ever since $4. I mean, I got into some of these cheaper ones like Harmony Gold, HMY, this thing here. So $4 going to 16 is not going to hurt you. And then
no.
the Watch Harmony HMY. I did, I jumped on these things pretty good.
Yeah. And you just
Yeah,
have to hold them, and you just have to have the strength to hold them.
Yeah. Yeah.
Yeah,
Well,
I agree.
and
it's
again,
part- a lot of people view stocks kind of like they view their house. It's going to go up and down all the time, but it's part of my life. And so if you view
Amen.
it
Yeah,
that way,
I like that. Yeah.
because
No,
I
I
mean,
agree.
I don't go out the window and go, God, I made 200 grand on the last 6 months. Oh, I'm down 100 grand. Maybe I should sell and go move into a condo. You know what I mean? That's not how I do.
Right.
Yeah,
and
No, I
that's
agree with
it.
that. I agree with you. It's a
Yeah.
storehouse of value, gold, period.
Yeah. And so anyway, these things definitely have been good this year, and I've been very happy with them. A couple of silver ones that have been pretty good is AG Majestic. And it's not gone anywhere near like the other ones, but it's starting to show something like a double low down there.
I would
So the
agree with
silver
that.
ones haven't moved. The biggest one I got that's moved anywhere is Pan America, PAAS. That's kind of the most popular one for size.
Yeah, those are a bit more industrial,
Yeah.
kind of economically sort of sensitive, I guess. And
But
with
that's a
China,
beautiful pattern that came up off of $12, Jim.
Yeah, no doubt. No
That's a
doubt.
very bullish pattern up.
And what about on the industrial side? Let's put a long-term chart on Freeport-McMoRan, FCX. I had great luck with that a few years back when it went to $8. You'll see that it went to like, yeah, look at it, $8. I mean, that was
Wow.
that was a gimme because we're not going to go never use copper again, and they're not making any more copper mines. So if you don't think it's going to zero, you load up all you can down there at $10, and obviously you'd have a nice ride up. Beautiful retracement to the mean, right there to the gold
Yeah.
line. And
Yeah.
it's done it a couple of times, and now it's back down. So the question is really, and from this RSI level, are we at the bottom and this cutting cycle? And they're going to, they're talking about stimulus, and this is the big key, I think. I don't know if you guys follow this. China is supposed to be stimulating because they are not getting any traction. If they were to stimulate, and if they could turn China around,
Ooh.
that would open up the oil because 40% of demand of oil comes out of China, and would also open up this copper thing, maybe, wouldn't it?
Yeah. I think it
yeah,
could.
they keep bulldozing communities over there, and I mean, as long as they're doing that, there's probably not going to be a lot of demand. You see these videos of like 5, apartment buildings that they couldn't sell, and then they just raise them. It's
That's
pretty
one way.
unbelievable.
That's the one thing. That's one way of correcting oversupply. Just
Yeah.
bomb the bill.
Yeah, just bomb it, bomb the entire development, and
But-
drive on. Talk about cutting your losses. Boy, those guys are good traders.
I hope they don't do that to the citizens. That'd be terrible.
Mhm.
We have too much population. Get over here.
Well, with a birth rate of 1 in China, I think it's time for us to probably forget about China for a little bit. It's all going to be about India. But
you want to look at a couple of international markets? We could look at emerging markets, EEM. And we can also look at India, INDA. But emerging markets is supposed to benefit from a weaker dollar, and it hit the gold line, and so there could be some there could be some potential there. And
Mm-hmm.
INDA is your India. And that's already gone very nicely.
Yeah, the horse is out of the barn there a little
But
bit.
what's the RSI telling you there, Michael? Is it telling you that this could all be a big top because it's such a divergence?
Very much so. Very
Yeah.
much so. Just
And
same
there's a
thing
big
telling
reversion
you.
potential, right? Big reversion potential there, right?
Well,
Yeah.
yeah. And possibly, I mean, at least you got 52, but possibly back down to 45. Yeah, sure.
Yeah,
For sure.
I agree.
And you know what? When it does it, I don't look at it like get out of the way, get out of the way. I mean, I do if you're a trader, day trader, but I look at it as like it's healthy.
Yeah.
You know, it's got to come back because that's healthy. So depending on your, I think it definitely could. And yes, that's exactly what the RSI is telling me. Look at it, it's making new highs, and look at that RSI. Lower high, lower high, lower high. Done it 3 times.
All right, let's look at one last one, and then you're going to give us individual stuff. TLT. I mean, if you are a believer they're going to cut, the call options or the buying into TLT has got to be a pretty reasonable thing. You know what I mean? Because you got a 10% move up to the gold line. And
Ooh, you want my opinion.
so, I mean, but I mean, again, you know, if they are not going to cut dramatically, and of course, there's a nice little trend line underneath those lows into where we are right now. So this could be, again, if this is going to be a buy the rumor, sell the fact. They've already bid up the bond market because yields are at 360. And so they've already built, it used to be 475 in April. So they've already bid up the bond market in advance of this cut. And you can see David put a nice little technical resistance there off the former lows. So, and the RSI is in that region where it wouldn't shock anybody if it rolled over a little bit. But
should I start?
Yeah.
Okay. I actually, because I have an analysis client that I cover credit. And so I cover bonds. And we walked it all the way down, right? Interest rate hike, hike. And so October of 2023 is when it hit its low. It completed the first 5 down. And that would, on the bonds, that would be from the all-time bond high. I'm on the 30-year bond. So it hits its all-time high in terms of bond price, all-time low in terms of yield. It drops in 5. That's a major low. All it's doing right now, and that was only wave A. All it's doing right now, Jim, here we are again in a B wave. Yes, cash index. Or just go to that. Yeah, that one. So we're just finishing up an ABC. Now we're finishing the C wave going up. I think we got room up to probably 133, maybe only 130. But I have a target at 136 for this to kind of come all the way back up. Now on my chart, David, I'm at 127. So
is that the TLT you're looking at, Michael?
No, at the 30-year Treasury.
It's the ZB is my symbol, ZB.
So you're looking at the future.
The futures market.
Yeah.
Yeah, that one.
Oh, okay.
Okay.
So I have, right pretty line is I got 136. And I think that's where we can get. And then we're finishing a large B wave that started in October of 2023. So whether this takes until October of 2024, okay, big deal. A 1 year, we're doing a recovery type rally. But what comes next is like all of this bumble and jarble and crap that everybody wants to spew about bonds and what the Fed has to do. And gee, we need to have rates back at 1%, whatever the garbage is. Like, it's not going to happen. It's not going to happen. The market is telling you it's not going to happen. Reality is telling you that it's not going to happen. And if it did, then it's manipulation, because we'd be back in the same boat that we were in with the market screaming at 20,000, right? And that's, no, I actually have to go higher. If we're looking at the Dow, the market's at 60,000, and everybody's thinking that, it's the heyday. Glory days are here again. and interest rates are down low and they're just handing out money. You know, you just go to the local corner and they hand you a bucket load of cash. This is free. Go take it, spend it. And then we crash.
The wheelbarrows will be out.
The wheelbarrows will be out. Yes, absolutely. But see, it just, I don't think, and I don't want to be, you know, I'm a doom and gloom type. It's like, no, not at all. I think there's a ton of money to be made on the upside and there's a ton of money to be made on the downside. And I just think it's like, if we just keep our heads and wits about us, you're always going to have. But if you're an investor, then you better do it wisely. So,
you're right. All right, well, Hans, we are going to start with you about trying to explain to people how you can help them. And if you have any special offers or whatever, you could also mention it now.
Yeah, so, well, we've got a number of programs.
You want to share your screen and show anything?
Oh, we can share the screen here. Okay, let's do that. Yeah, I think TLT's got a good shot at 110. I think we're due for an overshoot. I don't think you hear people talking about it enough, and I think we can go. There's sort of this sort of
we're not.
interplay
Are you trying to share your screen? We're not seeing anything.
Yeah, is it not working yet? Here we go.
Okay,
Yeah, you kind of get this sort of, you know, this idea that, I mean, inflation, the fly in the ointment to some extent is that, you know, maybe I think the economy is probably firmer than people think, and maybe you kind of juice things a little bit too much. And inflation maybe kind of ticks up again. At the same time, you're sort of, you know, maybe based on things like China, maybe deflation is in the card. So, you know, there's kind of a little bit of all kinds of different scenarios happening here. And I think TLT can definitely overshoot to the upside without question. So what do we got going? I crushed the premium. I've got my free 4-day options trading challenge that everybody can sign up for. You get 4 days of the way that I look at things, which is looking at option selling from the perspective of a number of different pillars, picking the right stock, looking at volatility, you know, charting, everything, basically the full kind of package of which, you know, of all the things that you do to kind of increase your edge and increase your odds in that game. Because option selling is fantastic, but boy, if things get going the wrong way, you can definitely give back a lot of what you made. And I think that's what a lot of people don't focus on. And so right now I've got a bundle. The course on its own is $497, regular $999, but I've got a bundle where you get that. You get my Gamma Options Mastery course, which is 16 hours of videos. You get my Iron Condors course, and you get 6 months in my trading community for $777. So really, really nice package there. That's going to get you into everything you need to know about options. And really it gets into a lot more than option selling, a lot of long strategies and things like that. So getting a great response from that. Had a lot of people sign up recently, and they're really thrilled with it. So that's kind of what's going on over on my end of things.
Okay, thanks, Hans. And Michael, what do you have cooking right now? And then, of course, if you have any special offers.
I do actually, but first I want to just say, Hans, I absolutely love that number 777. I absolutely love it, my friend, and I think that is
Thank you.
Ingenious. And so having all of that put together, let me just for the sake of what I'm doing, I'm just going to show this screen, which is going to show you a lot of things all bundled up next to each other. But if I can open this up a little bit, what I do now is, first of all, a little bit of my history. I am an ex-market maker. I was one of the people on the trading floor that waved their hands and screamed and shouted, and I did that for many years. And I've traded here in the United States. I've traded in London on the London options market. I traded in the European Options Exchange, DTB in Germany, and came back to the US. I ceased being on a floor, and then I changed from trading options because we didn't have all the volatility instruments that we have now, and all the ability just to kind of, work more succinctly with gamma and things of that nature. And so I got tired of overnight vol. and the fact that things roll around the globe. And by the time I wake up, you're like, oh, you're either down big or up big. And so I decided that I wanted to become a day trader, and that has been my focus, and that remains my focus. Now, yes, I still have positions, but they're mostly just in those long term, one of them being gold. So again, what I tend to do is we are looking at, and I kind of will show you, I have a trade room, and in that trade room, we are trading the futures market, and we are, oops, that's a little bit, got to move over more. Let's go all the way over. And so I've turned into what I'm trading is just off of a 5-minute, 2-minute, and 15-minute chart. And right now I focus on the NASDAQ in the trade room, but I also include the analysis for the S&P. And then I also give levels each morning for people that trade options, swing or day trading options. And those numbers apply to the NQ, the NDX, the ES, and the SPX, and the spiders and the Qs. And again, what I'm giving are where possible volatility triggers are, where there are large accumulations of gamma, and depending on direction that the market's going in, does that have a positive or negative effect? And then also call wall and put wall, which are also very important levels. And so right now I am running, and it ends today. It ends today at midnight, and that is I'm running a promo for the trade room. And if you had an interest, you can go to www.logicalsignals.com right there, and or tradershelpingtraders.com, and then just put a / and just say trade room, and that'll take you over to that screen. And normally my trade room is $299 a month, and right now I am running a special for $200. And so you can come in, you can check us out, see if it's going to work. If it's not going to work, so be it. You're not stuck on something that you got to keep paying for. I also offer coaching, and I'm not offering any specialties on the coaching simply because, it's a lot of work. But the biggest one right now is on the trade room. And so my gig in the trade room is that I try to show people how we can make $300 a day, which basically is just covering the cost of the trade room. And I also discuss, a good strategy to put together on and work on mindset. So that's me in a nutshell.
Okay. Sounds good, you guys. As far as Option Professor is concerned, we have an options alert service. So you go to optionprofessor.com, OPTION, professor.com, and you can find out about it. We also have a seminar happening tomorrow, and that is going to be with trading indicators. So if you put your information in, I'll get back with you and get you the link. Now, again, this option service, as I've been in it a long time, people need education and they need ideas. And this is a one-stop shop for both. I've got an options masterclass I put together with Daniel up at Trading Indicators. 3 sessions, 6 hours, pretty comprehensive. That'll help you if you need to know more about options. And then every Sunday night, we send out ideas. And I specialize in the strangles, where I'm basically looking for smaller premiums, and I'm looking for all heck to break loose. In the last 6 weeks, we've had a lot of that. Google, IBM, Affirm, Zscaler, Apple. And we even did some, when NVIDIA went down to $90, we did some bull call spreads that worked out quite nicely. So again, these are ideas. You can adjust them. You can, look at them. You get some ideas of what different strategies are all about. So again, it's a month-to-month deal, just like Michael was talking about. So if you're not happy, you hit the unsubscribe and you're gone. But people have been pretty happy with it, so I think you would be as well. This week on Sunday, we just came out with some ideas that are already moving today as we speak. So if you're interested, optionprofessor.com, go learn about it, and then go to the meeting, which is free tomorrow, and we take it from there. Anything else we want to add here before we take off as far as the markets are concerned? You have a favorite idea, Hans, that you're kind of looking at?
What's the premium?
Yeah,
Just
crush the
gotta-
premium.
I
Actually,
love that
wait.
idea.
Well, I mean, is there any, you want to throw anything out there like a certain market you think the premiums are kind of ripe for, or?
I think broader premium is probably a little bit on the high side. I kind of like an iron condor right in here. You know,
Okay.
pick a 15 delta each side, go out 5 points each way on the SPY, let's say,
Okay.
and look for that Vega crush, right? Look for that option volatility to compress a little bit. You know, I think the odds are it's a whole lot of hoopla about not a whole lot, but a little bit like Nvidia. Kind of Nvidia was like, oh, this is a big number, and then not a whole lot happened until
Yeah, the premiums on Nvidia have probably been pretty nice to sell, particularly if you fade. Like I was telling people, you know, you have to almost be like a market maker, meaning when everyone is selling out of Nvidia at $90, you know, you got to start looking at credit put spreads maybe down there, and then at 140 or 130, when everyone's going nuts on it, you know, you got to look at some of the credit calls, right?
Yeah, and I think put spreads are a good way to go at this point with markets a little bit on edge here. I think that's a nice way to go. Give yourself sort of a limited risk type, you know, setup.
And some price
So,
advantage because you probably go a little bit out of the money, right?
yeah,
Yeah. So yeah, you know, the logistics behind the put writing is, you know, market rises, it's good. Market goes sideways, it's good. Market goes down, it can be good as long as down isn't a collapse, right?
exactly.
So that's
Exactly.
it. Michael, do you have anything real quick that you think you'd like everyone to focus on here today?
Yeah, you can pick them up each day going to my YouTube channels, which is Traders Helping Traders, and my name, and you'll get what I feel every single day and what I think is coming tomorrow. So that's what I would say.
I think
Because
David
actually, it's already done for today. It's already done.
I got you. I think David wanted to share his favorite girlfriend, the Palantir.
Yeah, I was going to mention, you know, my favorite stock, Palantir, just joined the S&P 500. So I've been
Very nice.
buying
Well
it
done.
up for you know.
I got to hop, guys. I got another meeting, but it was a blast. Thanks so
All right, you
much.
guys, we'll talk
Thanks,
to you
guys.
soon. Thanks a lot. And David, I'll send it back to you.
All right. Yeah, thanks, guys. Great discussion today. So just a quick reminder, be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app. Also, you can just go to TimingResearch.com. This post will become the archive for today as soon as I can get it processed. Oh, and then all right, let's go back to that. And also all of the Fibonacci and Elliott wave presentations are on Timing Research that you can review anytime. So be sure to check that out. And I just want to thank my guests again for today, Hans Albrecht of CrushThePremium.com and CashFlowInsiders.com, and Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.